Well, the markets are sitting around record highs for the morning. We'll continue to track this as we turn to the news surrounding the Fed. Chair Jerome Powell saying the U.S. Central Bank had been served grand jury subpoenas from the Justice Department threatening a criminal indictment. Let's get more on this and everything else from Theresa Shutt, Chief Investment Officer at Harbourfront Wealth Management. Theresa, thanks as always for joining us.
Thanks, Roger. Great to be here.
Let's get your thoughts on what is the story of the day, possibly maybe the year right now, depending on what's next week, what happens next week. But the Fed.
Absolutely. Yeah. I mean, with these subpoenas, Powell becomes the latest perceived adversary of the president to face a criminal investigation. And I think what's interesting is Powell has come out and said, exactly what he thinks this is, which is, a way, for the president to influence and put pressure on the future path of interest rates. So this is really quite, something that's remarkable. The markets obviously reacted negatively to the news. The Dow Jones is down. The S&P is down. Even the NASDAQ is down. Gold and silver, they've moved higher. I mean, these safe haven assets, that are becoming the preferred choice vis-a-vis the U.S. dollar. And I think, we're going to see, yield curve steepening, I think as an earlier commentator said, which means the bond vigilantes might be back. More concerns about inflation. If the ability of the Fed to really contain inflation becomes a concern, you're going to see, more and more of that, kind of transpire in the market.
And now they've kind of bounced back a little bit, the markets. I don't know if you just saw there. They're at a wash, maybe up slightly, two of them, one of them still down. And the TSX, though, those are the bond yields. And now the TSX, though, it's chugging along today. It's like it didn't matter what happened down in the States. Or is it reacting to it as well?
I think it's reacting to it. I mean, obviously, the TSX is heavily dependent on the materials sector. We saw that through 2025. That 30% return in that industry sector helped the TSX, frankly, outshine the S&P 500 over 2025. And so we're seeing, some of that, benefit, I guess, of this announcement, really come to gold and other material sectors, which is really, a big part of the Canadian economy. So I think that's going to continue to sort of track. And I do think that there's obviously more to come, but you're right, the markets have rebounded, but I still think it's going to weigh heavily. And I think there's going to be this new theme of kind of sell American assets. We saw that last year, a lot of inflows into AI stocks, but a lot of that being, the U.S. currency being hedged. About 80% of those inflows were hedged away from the U.S. currency. So that's investors wanting to participate in the kind of the AI rally, but not have exposure to the U.S. administration. So I think that's going to continue as more of these doubts start to grow about Fed independence. And the fact that Powell has pretty much, called it for what it is, I think, the markets are, really have to kind of take that in.
Mm-hmm. Where do you see the money moving?
I think international markets are really appealing. If you look at, Europe and Japan in particular, they have some very compelling, factors. They're already lower value. There's lower valuations there. We're seeing, strong performance in Europe, defense, aerospace, financial sector. Japan, we've seen a lot of corporate reform, strong profits, and even over 26. These are two markets that outperform the U.S. So I think, we tend to be very focused on the U.S. stock market, but there's other options out there. And I think if there's, this continued kind of interference with the Fed, again, I think you're going to see some of those inflows start to leave and more pressure on the U.S. dollar. I think that's going to be kind of a continued theme, at least for Q1.
And with the Canadian market, do you see money coming in here as well? I mean, we've outperformed them. Is it going to continue that, or are people going to look offshore?
I think there will certainly be some strong inflows coming into Canada. I mean, we are obviously a smaller market. We've benefited again from, the material sector. Financials have done well as well. But I think, from an investment perspective, I think you never want your eggs in one basket. So I think, obviously Canada, I think we'll see some inflows here, particularly if we start to see a rebound perhaps in the energy sector, with some, expansion of these pipelines and some of these projects getting fast tracked. That will certainly attract foreign capital. So, if the Carney government can proceed to get some of those projects done, I think that, that will obviously benefit the TSX.
And how important is it? Does it feel that that the Prime Minister starts seeing some fruition to the work that he's doing right now? How much longer do people want to wait before they start questioning whether this go away from the U.S. is going to pay off?
Yeah, I think he's taking the right steps. Obviously this week he's going to be in China, where he's set to meet with the president there, and I think obviously the conversation will be more on agriculture and whatnot. But I think there hopefully will be some focus on energy, because the reality is, without energy exports, our trade balance as a nation is actually negative. And so, I think kind of reestablishing that relationship with China, it was pretty frosty since 2018. I think that's really important to establish that trade corridor. I think there's tons of opportunities to export more of our resources to Asia. I think that's part of it. But I think again, we've got to get that pipeline capacity built, and it seems like they're taking the right steps. But there's a lot of work to be done. You need a lot of collaboration with both provincial and municipal governments to get some of these projects built. So we're in the early innings, but I think the right steps are being taken. But I think this is our number one issue. Obviously, is Canadian productivity and investment into our capital formation, IP, everything.
And before we go, just one last question. With energy, oil, there's a lot of instability right now. We already had Russia, but now we have Iran and Venezuela. You could argue probably is more unstable now than it was before, because at least you knew who was in charge. Now we're still not entirely sure.
Yeah. I mean, certainly, OPEC faces a dilemma for sure. Whether to cut production or not. To cut production, each country has to manage their own self-interest, but I think no one really wants to poke the bear. Really, with what we've seen with Venezuela, clearly that is that level of foreign intervention is pretty unprecedented. But at the end of the day, it's going to take billions of dollars and many years to rebuild that infrastructure. All that metal in the ground already, it's deteriorated. It'll require a lot of investment. And with frankly, the oil trading at less than $60 a barrel, it's hard to incentivize U.S. companies to go in there and start to invest their capital in Venezuela, even though it sits on the largest reserve in the world, still producing less than 1%. So this is a game changer. Obviously, I think there is still a glut. Canada obviously benefits from higher prices for oil. So I think there's a lot that needs to kind of happen to really have a better sense of where energy might go. But that said, I mean, it just increases the importance of Canada finding new export partners for its oil and gas.
Okay, we're going to have to leave it there. But Theresa, thank you as always for joining us.
Great to be here. Thanks, Roger.
Theresa Shutt is Chief Investment Officer at Harbourfront Wealth Management.